Good morning, traders. Welcome to the Flow Show, Wednesday, 28th of August. Nearly the end of the month, nearly into the final running of the year, the busy period. Soon coming, folks, next week. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, everybody. I'm doing fine, thank you. Yeah, we are trading date value end of month. So yeah, bit of activity perhaps today. Although most of the things are just following through on what they've been doing for the rest of the week.
Yeah, there's a little bit of disparity creeping in some of the dollar pairs. Kiwi's kicking on, euro dollar's going down, Aussie's doing nothing. Yeah, it's a few little bits and pieces going on, but it's not all going in the same direction. So probably, as you say, better than a month in there at the moment. Always got to watch the hourly marks in case you see some little fixed moves coming in throughout the day. But otherwise, 4 o'clock UK time will be the main time today to watch for any funky moves. Right, let's get stuck into some of the headlines. Not good news for gamers in Japan. Sony's going to raise the price of the PlayStation 5 by 20%. That'll give them some inflation. I don't know if that's a signal for them to hike, Kay, sticking the old PlayStation price up 20%.
Is that the equivalent of the Big Mac index?
Yes,
in the US? Let's make a new index, the PlayStation index, right?
Yeah, the PlayStation
know whether
index,
Japan is going to hike or not.
Yeah, exactly. Anyway, that's going up 20%. And that was reported by the Nikkei. And it's funny reading the story. The reason they're raising the price is because sales are slowing. Usually it goes the other way. When sales slow, you cut prices. But apparently they're raising them instead. But that's Japan for you. We've had Deputy BOJ, Deputy Governor Himino speaking overnight, saying that financial and capital markets remain unstable and the BOJ needs to monitor their developments with the utmost vigilance. They says the BOJ is to carefully examine the impact these market developments have at home and abroad and their impact on the outlook for economic activity and prices, the risks surrounding the outlook, and also the degree of confidence in the outlook. So these fragmentations, all these problems they're having in capital markets, seemingly producing, getting them to look at things more closely. He says, we will adjust the degree of monetary accommodation if it has growing confidence that its outlook for economic activity and prices will be realised. Then was speaking about the yen and highlighting how there's always two sides to the strength weakness argument. He says the recent yen appreciation may alleviate the import cost hikes and profit squeeze many small and medium-sized firms currently face. But then says a strong yen may lower the yen-denominated profits of export industries and Japan multinationals. So as I said, it's a double-edged sword when you're talking about strength and weakness of a currency. Kay, I don't know if he's in charge of stability and financial stability and all that, but what does he mean by these financial and capital markets remaining unstable? Was this just down to bond markets and liquidity?
Yeah, absolutely. They're still a bit afraid of after what happened there and that grilling, but the instability is also, in my opinion, an excuse to continue to at some stage buy a bit of bonds, trying to help the government. Although it was very strange because the government yesterday or the day before yesterday they sold some bonds, but the Bank of Japan waited for today to buy some of their scheduled ones, and instead of doing it the same day. Where if you want to have stable bond market, you rather do it on the same day, wouldn't you? So yeah, they're just shit scared that those hikes would derail stuff, and but well, personally, I think it's a bit of a false worry, because we already know from the Japanese whales that if Japanese bond prices would come down and Japanese yields rise, they would be ready to up their JGBs, and I'm not sure whether they really have to worry about the bond market more so than actually the currency markets. And the currency markets may, of course, drive stuff, because then you're not only talking about the whales, and because you're talking about the local businesses and exporters, importers, but also like foreign investors who are going to jump on your market, and I think they're really scared about what may happen, and which is somewhere from the start one of the reasons they are never going to hike by increments of 25 or let alone 50 bps. That's out of the question. So there's always going to be an element in their monetary policy which will be looking at keeping everything as stable as possible. But then we had this little experiment, and they then had this little experiment as well, for which Ueda was already grilled. That if they move at the same time that other central banks or other economies are starting to weaken a bit around it, we have this kind of wrecking ball effect and panic effect as well in the market. So yeah, they're very scared about derailing markets, because they have been fighting virtually markets for the past 30 years, you know. But I think that their fact of being scared for capital or bond markets or equity markets even is probably a bit overdone.
Yeah, but yeah, like I say, but a lot of central bankers, they just want to cover their asses, I think, a lot of this. So if something does happen, they can say they were on top of it. Right, over in Aussie land, we had some CPI data out for July. We had a year-on-year number, this weighted mean thingy, coming in higher than expectations at 3.5%, but it was down on last month's 3.8%. There was also a trimmed mean number that they produced, coming in at 3.8% versus 4.1% previously. Year on year. So inflation moving in the right direction, albeit remaining pretty sticky. The market was really not buying, most of the market is not buying the RBA's line that they remain hawkish with rate hikes on the table and whatnot. So yeah, I was looking for a bit more of an impact in some of the Aussie pairs, perhaps, on the hawkish rhetoric, but it seems plenty in the market are not believing their guff, and so it doesn't look like there's much of an opportunity. There still might be if the RBA suddenly turn more dovish, or at least remove hikes from the table. We might get a bit of a south reaction in some Aussie pairs, but yeah, the market not believing that, and the inflation backing that up as well now. Over at the ECB, Centeno says the path for interest rates seems relatively clear. ECB's not, says as long as disinflation path converges to 2% before the end of 2025, then he's comfortable with a gradual policy easing. He will wait for data to decide his September rate cut view. We get the flash numbers out of the Eurozone this week. Friday, I think it is. We get Germany regionals. It's not on there. Get German regional numbers tomorrow in the morning, and then the pan-German number early afternoon. And then on Friday, we get some others: France, Italy, I think Spain, maybe, and then the Eurozone number. So that's going to be potential icing on the cake, maybe, for some of the rate cutters at the ECB. We've got some house price data out of the US yesterday. Overall, there's a little bit softness in some, not in others. The F.A.C.E number coming in at 5.1% year on year, down from a higher revised 5.9%, but that's still running pretty hot there. S&P or Case-Shiller, the 20 city year on year, coming in hotter than expected. But again, a few pips down on last month. The national number, which isn't on that calendar, so that's the national for all of the US, came in at 5.42%, versus 5.94% year on year. So again, a little bit softer, but still running pretty hot. Over at the consumer confidence data as well, that was the big one yesterday, and it came in pretty hot. 103.3 was a number there, was expected to come in largely unchanged around 100.9. The prior month got revised up as well. Some of the other components of it, current conditions ticking up to 134.4 from 133.1. Expectations also improving to 82.5 from 81.1. And the important CPI number, the one-year CPI expectations fell to 4.9% from 5.4%. So watching the price action yesterday, you might have thought that the dollar would have started gaining initially on that headline number because that CPI number didn't pop out till several minutes later. But it seems at that time that that CPI number is more important to market players right now and what it means for Fed cuts than the improvement in consumer confidence. There wasn't an awful lot of price move around it, I should say. But that CPI number is a bit of a green light, further green light for the Fed. The expectations for CPI are coming down amongst consumers. We did also get some regional data. The Richmond manufacturing number not looking too good, adding to what we saw in the manufacturing sector previously via the ISMs and PMIs and whatnot. That came in at -19. Over in the Dallas and Texas Services Index, that came in soft as well, down 7.7, as you can see there. So that's the services side of things. As you see, the Richmond services as well, also looking a bit ugly at -11. These are just small regional surveys, but we'll look to see if there's a trend forming there. Geopolitics, and this was a funny comment. Well, I thought this was a funny comment from Zelensky. He said Ukraine has next steps planned apart from the Kursk operation on diplomatic and economic front. This plan is going to be presented to Biden, Harris, and likely Trump. I don't know if it means and likely Trump as in it's likely Trump's going to be the president, or he's just going to run it by him anyway. But he's going to take these plans to all three of them, probably. While we're in Ukraine, Politico reporting that the EU is going to consider training soldiers inside Ukraine. This is important because Putin has made it very clear that any acts like that will be taken as a step up again in hostilities, which he'll be forced to respond to. So this Ukraine situation, it may not be impacting markets too much, but we are still seeing these little step ups in hostilities, activity, if you like, and you've got to keep that in the back of your mind that something untoward may happen. It may come to a head at some point. UK PM Starmer has been still banging on about the upcoming pain. He says the budget coming in October will be painful. He's targeting a lot of middle-income earners, those, he says, with the broadest shoulders to wear tax hikes and some pain there. Now, he's been doing this a lot over the last few weeks. I just wanted to mention for you guys trading the importance of the budgets and these words and comments for the pound. Really, the only thing to be concerned about is not domestic tax hikes or pensioners losing fuel payments or, fuel duties and that sort of thing. It's anything that impacts investment firms, so corporate taxes, non-doms. That's going to be a big part of the budget, hitting people who earn in this country but are not domiciled in this country. That's the sort of thing that's going to impact the pound, because if it means foreign investors taking money out of the UK, that's going to be a negative for the quid. So you're going to see probably a lot of headlines, but if you're trading the quid, look out for the stuff that's going to impact corporations and investors. That's the stuff that's going to move the quid. White House's Kirby says Iran is postured and poised to launch an attack on Israel. So that sword still hanging over us as well. Talks, peace talks, or hostage swap talks, whatever you want to call them, are still ongoing in Gaza, and they keep progressing. So there could be some sort of resolution from at least one part of the situation over there. So keep an eye on risk trades if you see a headline dropping that there's been an agreement or something like that. That's it on the news front. Still pretty quiet. Anything we've got coming today, you might want to note 15 minutes after F.A.C.E kicks off is ECB's man speaking. She's a big hawk over there,
BOE.
which might offer some insight into what's going on the latest deliberations at the BOE. Yes, mate.
No, I was just saying BOE because you said ECB, but
Oh,
no,
did I say ECB?
BOE.
Sorry,
That's
BOE.
fine.
BOE's man, yeah. Later on, so just 15 minutes into F.A.C.E. Anything you want to bring to our attention, Kay?
Well, I mean, is it after the close that we've got NVIDIA? That's your next biggest event ever coming your way. Yeah, the equity markets especially are going to be scrutinizing what kind of results they come up with. Everybody's thinking, hoping, expecting bumper results, and so anything less could be a bit of a disappointment. But if they manage to match expectations, yeah, it's probably going to put another bit under the tech sphere, right? No, for the rest, well, it's I reckon it's minor now, but who is it in China there? This Evergrande stuff is still not done. The Country Garden is also thinking about further delays on bond repayment. So situation on that front in China hasn't really evolved much yet, if we're still talking about those things. And for the rest, we covered everything.
Cool. Thank you very much, mate. Right. Let's see what's going on in markets. Going to start with euro dollar. It did have another little look up towards 112 yesterday. Got up to 91, 111.91. Since then, it's fallen through support at 111.50 that it was holding up. That was a bit of level, historical level as well. But we had support there. We've fallen through there. We're just knocking on this little area here, 111.30s. That was previous resistance. Then we got the pop. Then it was resistance again. So that's where we're hitting. It's all looking a bit slow at the moment, but it's ticking the right way for now. That's a first step. Getting below 111.30 is a second step. And then we see what happens on the big figure down into this little area here. So it's looking a little bit soft at the moment. Probably we might be going to be playing maybe the 111, 112 game for a little bit. And the more that happens, if we do see that happen, i.e. we come down here, then bounce back there and come back here, the more we do that, it's going to give you opportunities to trade in between both sides, but it's going to mean that the pressure is going to be building if it breaks. So the more times we test 112 without breaking it, the more inclined I'm going to start to look at buy stops, because if it does break, then it's likely to go. Same for down here. If we keep hitting support around this 111, 110.80s, keep bouncing from there, it's going to build for a potential sell stop opportunity, i.e. getting in shorts if that level breaks. But this is euro dollar, so it might be moving pretty slower. If we do fail here, though, again, same thing. Anyone who's been shorting into this level will want to see it below there. That will knock out a few more of the longs, probably from this phase down in the 109s, 110s. So we could see a bit of a steeper pullback. So I think whatever happens, 111, 112, it's probably going to decide a bit of direction, or at least give a bit of a punch either way on that one. I'm still short, still happy to play that side. But yeah, I'm going to be thinking about what happens if one or t'other level breaks from that. Dollar CAD as well. That's looking a bit breaky as well. Another little break down through the bottom of this zone. I used to have my fib over here, and I adjusted it back up. This was the old fib level from here. 134.33-ish, and this fib pattern has been respected down here, 38.2, 50 and the 61.8, but it's probably more valid being over here, so I've shifted it, which makes us through the 61.8 down here. So take that as you will. Either way, I've had my zone down here, so we're below that. While we're holding the bottom of this zone, it does keep the pressure on the downside. We've got a little bit of support here in this 30s area. As I say, it was that old fib, but a level a bit all on its own. So we got a battleground between those two. Break down here, we're probably heading for at least the low 134s. Keep an eye on oil though, because we're not getting much of a bounce in dollar CAD, even as oil's looking a bit weaker at the moment. So we're seeing this down move here over the last couple of days, and dollar CAD is not responding. So this correlation is a bit on and off at the moment. Ultimately, need it back above the zone 135. That will take some of the pressure off, and then maybe we'll see if we get a move up towards the high 135s and test this big old zone up here that's broken down. But in the meantime, I'm keeping short, and I'm looking next for this level to go before I start slicing again. Euro sterling, still short this one. We're in to the traffic zone. This has been an area we've traded lots of times before down here. So we did spend near best part of 2 months knocking around here when we were down here last time. That 85 level capping any rallies. I'm potentially looking for a bit of similar play here, that we get a bit of stickiness down here, maybe a rally up 84.50, maybe 84.80 into this zone, see if it holds. If it does, then it keeps the pressure on the downside, and maybe we do have a look lower. If we do break down here, this is a big old level, as you can see, going all the way back 2020, all the way back. So it's a big old level, plenty of action here. If that breaks, then we're probably going to be low 83s fairly quickly, and then we get this other big zone, 82.80s, 82.70s, all the way along here. So this is another big multi-year level we need to keep an eye on if this level breaks. If it doesn't, then we'll probably end up doing a bit of ranging. You're still short this one as well, mate, aren't you?
Yeah, I reduced a bit today. Well, validate month end, perhaps a bit of dollar buying, and I think that's what we already see in the euro as well this morning. And on the euro crosses, I do think there's a bit of month end there, forcing people out of some euro dollar longs perhaps. And we just as a reminder, I mean, today and then into the end of the month. We look at charts, we look at pictures, we have our IDs, but then don't forget that you have to keep the clock in mind and trade with an eye on the clock if you want to trade. Because for instance, you might say like 111.50 on the euro dollar is a support level. I'm going to try it long over there. But fixing flows don't care about charts. They have to be executed, right? So we can never forget that there are flows in the markets that have to be done, regardless whatever your picture tells you, or regardless even what the actual trend may be. Okay, so and I think we're a little bit in that situation today on the euro. If you look at all the euro crosses, they're under pressure. I do think there's a bit of month end going through there, and then this afternoon as well, we may see a bit of US corporate. So I would not be surprised actually on the euro dollar to see the move, to see a move back down to 111. And if they really show up, it's not a guarantee. But if those US corporates really show up, why not print the 110.75 before or into the London 4 p.m. fixing, right? So all of that is possible. But yeah, I mean, euro sterling still a little short. Yeah, you know what, Ryan? I think it's not out of the question that we are going down to that 82.70 or whatever zone, you know, where we had those multiple lows from where we started, moves up as well. And just thinking about it going into September as well, you think about the ECB. Those guys are like more than half of them seem to be okay to go for another cut. We've got the F.A.C.E. Cutting as well, but the Bank of England is not a done thing yet. And then And then the real test may actually for the sterling may actually only come once the budget will be announced or leaked, because usually we know everything that they want to do well before. But I wouldn't rule it out that sterling keeps its bid tone all the way through September as well, depending, of course, on then the Bank of England, because they may throw things around. Obviously, Bonkers Bailey is never shy of a bit of a surprise dovishness or so. We'll also have data, of course, but for now, yeah, don't change winning team. Huh?
Yeah, and this is a perfect example of what we've just been saying about this end of month, corporate end of month, and watch around the hours. Here we are, 10 to 5 to the hour, and we're getting this moves. And as Kay said, look, pretty much every euro pair has had a little dip from whatever. Some of them down here, even more pronounced. Fresh lows, fresh
Yeah,
low, or nearly fresh lows, all coming in the last 5 minutes. Okay, so you can see all these moves. They're here. Not so much pronounced there, but in a lot of euro. So it looks like the euro is under the cosh into this month end, perhaps more so than the dollar. But as you said, 5 minutes, 10 minutes before the hour, watch for these sort of moves, okay? Because that's exactly what we're banging on about at the moment. The other one I'm still trading is the Kiwi, and that is potentially now making a bit of a break. The break was looking a bit iffy. Oh, it's gone a bit iffy there. Wasn't looking like it was really taking off after this move above this level here, but we have found a bit of tepid support. I'd like a proper test down here, another proper test down here, just to confirm it. And if I get that and that happens, I might consider starting to add back to my longs, just to see if we build support on here and continue to push higher. But for now, we're holding above this level and it's creeping higher. So again, Kiwi strong, Euro's weak, cable's still holding up. It has come off the highs, but it's not going too far. So there is just a little bit of funkiness going on. Not all dollar pairs are moving in the same direction that much. Aussie dollar holding up pretty well. But can't quite get above this 68 level. So a bit like the Kiwi at the 61.90, 62.15 area. This 68 level is a bit of a one for the Aussie dollar. We've had several tries at trying to get above it. They haven't lasted too long. So is this going to be another fake out move, or is it going to really get above and start really moving higher? So a lot of pairs still in the mix, really.
While
Yeah,
you're
go on,
on
mate.
that one, Ryan, again, I would like to stress that the models, and I mean, today we have one sort of move, like all euro crosses being sold, but don't forget that the models are still calling for, and if you base on equities, it is a call that I would make too. There's still perhaps some dollar selling for the month end, which would be then tomorrow and on Friday potentially. And that could see stuff like this Aussie putting a real test to that 68 figure a quarter. And this one is going to be extremely interesting, I reckon, once the month end is over, because we could get this runaway price action into month end if the models are correct, which I think they may be, and then come around 1st of September and all of a sudden put in a little bit of a disappointment failure, and because it is an important level, 68 figure a quarter on the Aussie.
Yeah, and if we do get a run through there, I'll probably have to have a look at this 68, high 68, 69s.
Yeah.
For a little bit of a short try up there, just to see if we hold, because this has really been a bit of a wider range up here, and that might look juicy because depending on what's going on. You never know. We've got all the data next week, NFP next week as well, so we could be anywhere. So just got to be patient, got to be cautious as always. Do you want to take it for a few, mate?
Yeah, sure. And while I'm taking them over, are you now revising all the NFP numbers for the past year and a half? Now we had those big revisions.
I'm not giving back prizes. I'm not redoing all that crap. Oh, did you see that? Did you read that Goldman piece as well? They said the Goldman were out with a piece on that NFP revision stuff, saying that the actual revision should have been only down 300,000 something because of all the immigrant workers not being declared and all that sort of faff. So yeah, that's a bit of after event analysis.
Whoops. So we have to massively buy dollars then on the back of the revision of the revision.
Definitely.
All right. Yeah, I just want to have a look because this is at the cable. Because I highlighted this zone here, 132.75, 133. You have to go back onto a bit of a longer term as well, to find this 133 here. For the time being, it's been rejected a bit in line with what the euro dollar did up at 112, but. This is one here that I'm keeping an eye, as I said, on the clock, and I'm actually hoping for some of those U.S. corporates to come into the market today and drive the cable a little bit lower, because it may provide a bit of an opportunity if we get anywhere near this 131.5, 131.70. May give an opportunity then for a last run up into the month end. It is still very big in the meantime because of euro sterling. That's keeping the cable really big. And as we have been talking about it, and we have to position it, it is a justified move, this euro sterling. So I do think that anything that would be driven by one-off dollar purchases and bringing it down to below 132 towards that, well, include 80 perhaps, 130, 180, 131 and a half would provide a bit of an opportunity to try and catch a knife here. That is what I'm planning today if I see it. And then we need to come back on those euro, especially, well, we've seen the euro sterling, euro yen as well has been under the cosh, but then yen is living its own life. But even euro Canada is lower than where we traded. After this panic spike here, we've gradually started to come down here, and now we're back below this channel support here. It took like well, if you zoom in a little bit, it took like at least 5, 6, 7 tries to do it. Look, I also think it has to do with some euro crosses and some antipodians being just bid, that this is going down. But I would not be surprised if we end the month anywhere close to 162.5, where we should then start to find, as we can see the traffic around there, where we should start to find support. But for as long as this stays now below 164, 50, 60, this looks to me like it potentially could go for another low. And then you look at the euro kiwi, that is pretty strong. And I've also highlighted this zone here in the low 180s, whether it be on some of the flow shows or in the room. We just crashed through it, and a bit similar to what Ryan had to do on the dollar cat, moving that fib up, those fibs up. We do come relatively closer to some support that there was before, but now similar to that dollar cat, it's through around 179 and a quarter. But really, the big break happened here, and it also had a few tries before going in the low 180s, and we are going down. Similar to the Euro Aussie, it is, I think, potentially looking at 177, the figure. Why not even 176, 60s? perhaps a bit too much of an ask to get down to 175, but look at the speed after we had that panic move that it came down with. I wouldn't even rule it out before the month is over, and then we will reassess what is going on. If it's just that month-end euro weakness, or if there's something else going on. And Rick, absolutely, yeah. The euro weakness, the euro Aussie weakness could see this Aussie really go for a run higher into month end. Now, what would happen if we break above here? Then we are going to run into that next zone, and Ryan already spoke about that high 68, 68 three quarter towards the 69 level. If we really would see a spike up there, I think longs for one should perhaps reassess and look at the reason and the timing that we get up there, and look at then pick up the chart again, because this is a longer term trend line coming in there, and it also is a level of interest on the FIBS as well. It's a 38.2 of the whole move down from 2021 to into 2022. Okay, so this is going to be a big level on the more medium term. Now we have to look at what's happening in the Swiss franc, really, because right or wrong, we are seemingly back into a month end where the Swiss franc is extremely strong, and we are now trading on a bit of a level here. I've also put the shorter term chart of FIBS of this bounce, and we are not far from it either. But it does look to me that Swiss franc is again being bought into the month end, and that could actually, if you look at the dollar Swiss, really put those December those end of December 23 lows at risk, or at least seeing a chance for a retest down there. And if you look at a bit of a trend line activity here, it could be a decent target as well, 83 and a quarter. Keep that in mind. We are still about a big figure higher. This is a daily, okay? So those moves don't look big, but they are pretty sizable. It's over a 1% move. But I'm just noticing what happened in what's happening in the Swiss franc here, and it does look like this that this dollar Swiss is well, the Swiss franc is bid against everything again in 2 months, and so just keeping a very close eye on this on the developments in Swiss franc, which in turn, as I'm saying, some of those moves can create opportunities. This is one that we are going to really have to monitor then into the month end, because we are, as we have already seen, that we are roughly, although nobody knows the exact low in 2015, but those are relatively big levels down there. So this is going to be worth keeping a very close eye on. I don't think I have much more to show today, unless somebody has something specific to look at. Max, in the meantime, still not feeling well. We had this thing about those judges again, where AMLO is pushing for them to be appointed by public vote, and the investors clearly didn't like it, so the dollar MEX spiked again. You trade the MEX in a different way than trading dollars, okay? You have to look at the MEX, what it does against process, for instance, and then you look at Euro MEX. We are at the highs that we've seen since April, okay? So that is one that is really testifying that the Mexican peso is really not feeling well, and we are at the from where the carry trades really started to kick in, and I recall starting to trade them too from that area somewhere once COVID started to settle down. We are at that 61.8 in, or we tested at least a 61.8 in the Euro MEX. So Keep an eye on 22.15 euro max. If that would go, that would still mean, because we see a bit of a lower euro, but Mexican peso still staying weak as well. If that would go somewhere in September or so, watch out. All right. And that's really what I wanted to show today, Ryan.
Thank you very much, mate.
Back over to you.
Well, thank you. Yeah, we'll call that a day for today. So yeah, have a great day, everybody. Thank you as always for coming to the Flow Show. Trade safe. Thank you, Kate, as always. And yeah, we'll see you all tomorrow. Have a good one.